Good morning. I'm Richard Calhoun, Creekside Realty, real estate broker here in Silicon Valley for 40 plus years. We're here to talk about week 48 in the Bay Area. We're going to start off with the first data slide, which is the number of active listings. That's this broad, bold gray line. And you can see we have roughly 3,000 listings now available in the four-county area. The four-county area that we look at is Santa Clara County, San Mateo County, Alameda County, and Contra Costa County. Essentially, about 75% of the 9 Bay Area counties. Inventory is going down, but you have to pay attention because inventory is very seasonal and typically goes down at this time of the year. So the question becomes, is it going down more or less than normal? Now you're looking at the number of offers. The number of offers is also declining. And again, what number of offers normally declines at this time of the year. And the real question is whether it's declining more rapidly. And as far as the number of offers, just about 2,200, something just south of 2,250. And then the key indicator is the days of unsold inventory, which is the bold blue line. It's going down as well, but remember, a decreasing DUI is an improving marketplace. It's indicating that it's taking less time to sell all the existing inventory if there was no new houses listed. And that is the key indicator. And that's right off the left-hand axis. And that's about 50 days of unsold inventory. So right now in the four counties, we would sell all the properties out in 50 days if there was no new inventory coming on the market and the rate of sales stayed the same. Neither one of those conditions would be met. So it's a theoretical number, but it tells you how quick the spin of the marketplace is. Now what I've done is I've broken down and looked at the DUI for each of the four counties. Santa Clara County is the blue line. Alameda County is the dark orange line. San Mateo County is the bright yellow line, and Contra Costa County is the gray line. Basically, the way I read this is both San Mateo County and Contra Costa, the gray and the yellow line, are decreasing, which is an improving marketplace. And Alameda County, the orange, dark orange, and Santa Clara County, the dark blue, are basically at a plateau. Yes, more globally, the trend is down, and that's the trend I would expect it to be. But the last couple of weeks, I would actually call them pretty level. This is looking at the magnitude of overbidding. This gives us an indication of how much pressure the buyers are feeling. And notice the fairly rapid decline in San Mateo County. They went from basically the seller on average getting about 100.5%, less than 101, but more than 100, down to something like about 98.5. That may not sound like a large decrease, but just by the slope of the line, you can tell it. And I will represent, once you start getting below 100%, it's harder and harder to get that number to go down. And that's because buyers, for the most part, are reluctant to go in and offer the sellers below their asking price or significantly below their asking price. Instead, they wait for the seller to get realistic and adjust their selling price, which is why the blue line, a cold marketplace, starts at 99% and a hot marketplace starts at 1.5% above. It's sort of giving a nod to it's easier for the overbidding to go above 100% than it is to go below 100%. In general, all four counties are either at a plateau or decreasing the magnitude of overbidding. This is also looking at overbidding, but slightly different. It started a year ago, and I looked at every month for till about August, I think it is. And then starting in August, starting in week 13, which is 3 months back. So 3 months ago, I start looking at every week. And the blue line here down and to the left is indicating a decreasing marketplace. The arrow up and to the right is indicating an improving marketplace. And if they're both on any particular slide, it's a plateau. And the reason we're at a plateau is notice how closely grouped all the dashed lines and all the solid lines are. Basically, since about the end of August, we've been at a very much a plateau in the marketplace. It's not a great plateau to be at, but the market's not getting any worse, significantly worse, or any significantly better based on what buyers are overbidding. Now, that doesn't mean sellers aren't dropping their price still or anything like that, but it just means that the overbidding that the buyers are making is basically at a plateau. Here's a nod to the sold price. The horizontal line allows you to come back and see where the price is currently at compared to historical numbers. And you can see that we clearly had overshoot in 2022 on pricing. Alameda County had a fairly significant overshoot. Santa Clara County had significant. San Mateo County had a significant. The least overshoot was in Contra Costa County, and that was on a percentage basis as well as in terms of real number being the lowest price. But you can see that fairly rapidly, the counties all got rid of their overshoot pricing. And basically, for closings, since about the middle of September, the price has been fairly flat. The Bay Area might be quick to respond to price changing in market conditions with their price, but it appears, at least for the last, 75 days, we've been basically at a plateau. Because if we call this September 15th, which I think is a reasonable estimate, you got October 15th, November 15th is 60 days, and December 15th is going to be 90 days. And we're not there yet. Somewhere around 75, 80 days, the pricing has been fairly plateaued. Yeah, you might argue that Alameda County just did a little dip, and you might even argue Santa Clara County did a little dip, but that's mostly the noise. Look at what San Mateo County did. They came down, they went down and up and down and up. I would read those as plateaus. Everybody can interpret the data the way they want, which is fine, but the data is what the data is, and what the significance of it is very debatable. Here's putting the data on the logarithmic scale, and I did that for noticing how much Santa Clara County caught up to San Mateo County on pricing. Basically, you'd expect the vertical separation on these lines to stay proportionally the same, and you can see that Santa Clara County caught up to San Mateo County here, got back a little bit of the distance, and then caught up again here. We're starting to lose some of the distance again now. It's still closer here than it has been historically, in my opinion. Here's looking at the different raw data for the different counties. So you have single family homes on the left, condos and townhouses on the right. This is the 4 counties grouped together: Santa Clara County, Alameda County, Contra Costa, and San Mateo County. Then you look at the number of new listings, and you're all over the place. And it's sort of surprising that Contra Costa County actually had a decrease in the number of new listings. I would not have expected that, and would like to go back and check my data, but active listings change all the time, so there's no way to really verify that, but I didn't notice any issues. Anyway, the reason the numbers are up generally so much is because we got away from Thanksgiving. Sellers don't list the week of a holiday, so they didn't list a full week ago. This past week they listed, which is why the large increase. Active listings, same thing, but the increase or decrease isn't as significant. The overpowering any increase that you would expect in inventory is the decrease that happens at this time of the year for the end of the year holidays. Offers accepted, you can see that increased in some counties, and other counties it decreased. San Mateo County is the one that really bucked the trend at minus 23%. And again, to sell more homes Thanksgiving week than this past week is a little surprising. Normally you would have expected to sell less homes during Thanksgiving week. DUI is the ratio between the two, and looking at the 5 weeks to get rid of some of the statistical fluctuations caused by holidays, shows that we're at 52 days for the combined 4 county area for this week, up from 52 days. Not a huge change, a half day change. Each county, Santa Clara County gained 2 days, Alameda County gained 2, Contra Costa lost 2.5, and San Mateo County lost 0.5. Remember, losing DUI is actually an improving marketplace. Here's the number of closings. That also went up. Closings aren't as impacted by the holidays as much as offers are, but closings are still impacted because you only had 4 days and essentially only 3 days this particular holiday to record a transaction. So there's just less time to do all the work. So some transactions that might have been ready to close would have potentially got delayed. Then if you look down at the details of the closings, you can see the frequency of overbidding, 38% overall, low of 31% in San Mateo County, a high of 47% in Alameda County. So there is a fair amount of fluctuation. Average overbid is 103% in Alameda County. It's only 98.7% in San Mateo County. So again, a fair amount of change, 98.8% in Santa Clara County. Then appreciation. And this is actually an interesting thing that may confuse some people, so I'll point it out specifically. The 4 county area had an 18% appreciation, but none of the counties individually saw saw 18%. In fact, the highest are right here at 16.9 and 16.7. This is much more reflective of what the individual property values are doing because there's more homogeneity between the properties when you're within a county. How you can explain this greater increase for the 4 county areas is if all of a sudden a larger market share happened in the more expensive counties. If the more expensive counties all of a sudden had a larger market share, that would bring up the median for the 4 county area, but not impact the median for each area. And this is the appreciation over 2020, the entire calendar year. You're somewhere around 2.5 years of appreciation at this point. The median close of escrow is somewhere around August, so it's more like 2.25 years, something like that. That's still reasonable appreciation until you look at where we have been. So what we've been talking about is what I call the Bay Area data, single family homes, mostly. The last slide was brought in the condo data, 4 counties being Santa Clara County, Alameda County, Contra Costa County, San Mateo County. I typically rely on the 5-week data to get rid of the fluctuation, and my reference years are 2014 through 2021. We're going to look at a new slide here. I know it's not very attractive, but I'm looking for feedback on what you want to do. I'm getting some pressure from folks to expand my coverage area. And if I expand my coverage area, I'm not going to go into the detail that I do for the 4 county area. So these are the data sets that I thought might be interesting. The number of offers, the market share based on Northern California, market share based on the Bay Area. And I will point out that I did market share for counties that are outside the 9 Bay Area county area, but I put a line through it. And I did that so you could see my justification for bringing them in to some degree. Those percentages are bigger than like Napa and on the same order of magnitude as San Francisco, and they're close, especially Santa Cruz. Whether I should or shouldn't include them is up for debate. Sacramento is pretty far away, but look, it's 26% essentially of the size of the Bay Area, so it's a huge part of the marketplace. San Joaquin, a little bit out of the range, but people are commuting out to Tracy, Mountain House, things of that order, and it's at 13%. So I don't know if we want to include those, exclude them, but not include them in summary data. The Northern California is all 13 counties put together, and then the Bay Area, the 9 Bay Areas counties that touch the coast. You can see the DUI varies from a high of 90 days in Monterey, 78 days in San Joaquin. So to me, this is somewhat interesting that the outer lying areas have higher days on sold inventory, which doesn't surprise me. The demand, the job center is in the Bay Area. As you get further out, you have to have a slower marketplace to have lower prices to make the commute justifiable. Some of the more faster area was Marin. So, it just gives you a bigger, broader idea of what's happening with the marketplace. Sale price to list price, you can see that San Francisco and Alameda County are doing the best as far as overbidding on the amount. On frequency, they're also doing the same on frequency at 55% and 48%. And then here's the price range, so you can see the difference. You go up to Sacramento and the median price is $505,000 compared to the Bay Area, all 39 counties at 1.2. When you're looking at 9 to 13 counties, it pulls the median price down by 25%. Once I decide what data set we're going to set at, I'll try to make it graphs to make it a little more presentable, but I wanted to share that data and see what people thought about it. You can either email me at my company email address, creeksiderealty@gmail.com, or through YouTube. If you use YouTube, just remember it's public and other people can see what you're reading. If you send it to me, I get your email address. Open for any questions as I get ready for that. The green is what I call my root URL. If you add in 2022 to the end of the green URL, you get to the live presentation Saturday morning at 9 o'clock. If you add in the letter H for handout, 2022, 1203, you get the handout. My goal is to get that up by about 15 minutes before 9, and I did achieve that today. And any specific episode, you can get there by adding in the year, month, date code, or just put in the green and you get to the whole thing. Do I have any questions from anybody? Let me see. No one is unmuting themselves, so I will proceed. Now we're looking at DUI being the purple, and now we're adding in what it normally does. So the black line is the DUI you'd expect it to be at if we were having an absolute normal year based on 2014 through 2021. The red would be the lowest, which is the hottest marketplace we've ever had, and the blue is the coolest marketplace. So we're actually sort of following the normal pattern. It's a little skewed to the right, but here's your increase. You can see the increase in all three lines, and then it rolls over and does the decrease. We're on the decrease now, but we haven't been on it for as long. But remember, decreasing DUI is a good thing. The large reason why DUI is decreasing at this time of the year is simply the decreasing active inventory. And if active inventory decreases, the supply ratio decreases. And that's, I believe, what's happening now. The other thing that could cause it to decrease is increasing offers, and that's not happening. Here's the delta DUI. So now you look at the DUI compared to the median, and you're above by about 20 days. That's fairly significant, especially back here, considering we're 20 days below. So if the median was about 35, here you were about 15, which we were. And here, if it's 35 and you're 20 days above, you're about 55 days. So that's what it shows you. This is all 4 counties put together just to give you an oversight. Now here's DUI for each of the counties. We saw that a bit earlier. Here's the number of offers. The number of offers is the purple line. Again, the blue line is the least number of offers we've had in the past 8 years, 2014 through 2021, and it's inclusive, which is why it's 8 years. The gray, which is very close to the blue, and all three are close together, and that's just because the rate of the fall is so steep, and that's because of the end of the year holidays. So you can see that normally we're decreasing, but we're having way less inventory sell than we would expect to be selling. And that's really the story, and we'll see it a little bit later. And I don't hear people talking about it. A lot of people are talking about prices decreasing and things of that nature, and I would actually say prices appear right at the moment to be fairly stable. Overbidding is decreasing, absolutely. Buyers are feeling less pressure, but the number of transactions has decreased dramatically, and that impacts the industry. Redfin, Compass are doing layoffs. I'm sure the title companies are doing layoffs. Big lenders will be doing layoffs. Here's the delta in offers. So what you do now, this is the level of offers you'd expect, and right now we're somewhere around 800 offers below where you'd expect it to be. We're somewhere around 3,000 right now, so you'd expect it to be 3,800. That's a fairly significant drop. It's more than a 20% loss in the number of offers. Yes, you can see that the pandemic had a bigger drop, but that was a complete shutdown of the marketplace. In fact, I'm a little surprised at how close we really got here, 1,400 off versus 2,200 at a busier time of the year when the market was still fully functional and able to buy. And it's just frankly, the lack of the buyers. The buyers are sitting on the sideline on why there's so few transactions right now. Here's the number of offers for each of the counties. You can see Santa Clara County is doing a nosedive steeper than the other counties, which is a little surprising. San Mateo County is sort of a plateaued the last couple of weeks. Contra Costa, the gray line, is a plateaued. Alameda County is dropping, but Santa Clara County, the blue, is dropping by far the most rapid. Here's the market share. So what this does is lets you see if a county is doing better or worse than other counties. And you can see Santa Clara County is really showing up here as the only county going down. So Santa Clara County is losing market share. The other 3 counties are gaining market share. Yeah, you might be able to argue that Alameda County lost right here, but I think that's a statistical fluctuation with Thanksgiving more than anything. Nobody's lost this kind of numbers. We were at 30%, we're about 24%. You've lost 6% on 30. Santa Clara County lost 20% more of their transactions than the other surrounding 3 counties. Here's your active inventory for all the counties. Here's the least inventory we've had. Here's the most. So this is actually a little bit surprising. With the low number of offers accepted, you expect inventory to be growing. But what's happening is sellers are adjusting their plans, and the inventory is essentially exactly where you'd expect it to be. As you can see that it's right on top of the gray line, which is the median for the 8 years, 14 through 21. Now you're looking at the delta between the number of So you can get here and look at a raw count. You can see we were way below the number of active listings you'd expect. You got up to basically right the level you'd expect right around July the 1st. Then we went back down. Now we're back up again, and look like we're starting to level off. There's no way to predict which way that will go, but you can see that we're within probably 50 listings for the 4-county area that you'd expect to have at this time of the year, and 50 listings probably out of something around 2,200 is pretty darn close in my opinion. Here's the magnitude of overbidding. Here's where you look at the paired lines. The outer lines are basically my pseudo min and my pseudo max. The max obviously is higher one. And what I did is I'm looking at 97.5% and 2.5% to get rid of any input errors that are in there without having to catching every single one of them. I do go through and catch them. I typically catch about a dozen. And input errors where someone put in a property, say at $512 million instead of $512,000, those kinds of things. It's very common to add in extra zeros, drop extra zeros. Sometimes people drop the extra the leading 4 digits, which is a little harder to understand, but I've seen that. Then the 2 gray lines are the 10 percentile down here at the bottom and the 90 percentile. So 80% of the homes are selling between that range of overbidding. Then the paired green lines is 25% and 75%, your quadrants. So 50% of the homes are selling from between some number around 96%, and that's probably about 3%. So between 96% and 103% is where 80% of the transactions are going. You can see the median is the dark green solid. It is now finally broken off the 100%. You can see that you're at 100%, which is why on this one data slide, I tend to follow the average, and the average is the green line because you can see there's a little bit more movement, and even the plateau was a shorter duration because it looks like the average started to fall down probably at this data point back here and didn't start to here. So if you're trying to read the marketplace, the median is useless when it's at 100, frankly. Here's looking at the magnitude of overbidding compared to the median. So the magnitude of overbidding is basically a little bit below what you'd expect it to be, maybe 0.25%, but pretty close to the median and get up and going towards the median. So if you were on the black line, you'd be having the normal amount of overbidding. Earlier this year, we were having a huge amount of overbidding, more than you'd ever expect. And that's the red's up at the top of a hot marketplace and then a cold marketplace as you go down. Here's the magnitude of overbidding for each of the 4 counties. Alameda County is going down, San Mateo County is going down, Contra Costa County and Santa Clara County are relatively flat. Here's the overbid for each of the 4 counties compared to the median. The median black line here is the 4-county median. So this is what the county median, all 4 counties they're doing. So you can see that the overbidding in Alameda County is much greater. It's much less in San Mateo County. It's less in both Santa Clara and Alameda County, but closer than San Mateo County. Here's the overbidding each week. The purple line is this week's distribution. The red line, dashed line up at the top is the best week we ever had, which was April 12th, 2022. Some of you may remember for a while there, I was saying it was March 26th. That was when I was just looking at the 2 counties being Santa Clara and San Mateo County, adding in Alameda County and Contra Costa County, delayed it by basically weeks from the probably March 28th, and it's probably 2 weeks, delayed it by 2 weeks. This is the worst week we ever had, which was back right after the World Trade Center, November 30th of 2001. So here is a year ago, and the reason I have the up arrow, red arrow, is the next week that when it pulls up, or the next month when it drops up, is going to be improving. When you see the blue line add in, it means there's basically very little or no change. So there's the slight improvement. Oh, well, I would have expected the blue to show up for the 1 week there, and it didn't. Now I'd expect the blue again, and it won't. I didn't update these. Now the blue shows up because now it's going to disappear because the red's going to disappear because you're going down dramatically. And pretty soon that from now it's going to stabilize. There's really no more change. So those 2 should have been the red back on, and it will probably show up on the next slide. There you go. So 10 weeks, 9 weeks ago. And I also boxed the dates so you can see it up here. So the buyer pressure is being fairly stable the last several weeks, as you can see, almost, I think it's 13 weeks is pretty stable. Plus 1 week, I do that because the 29th is the reference year after year after year. That's using my real estate fiscal year of March 1st through February 27th. And this year is off, and most years are going to be off. So from the 29th through December the 3rd, I call that a plus 1 week because I put the data up there, and it is a week, but it's an off week, so it's not homogeneous with the other data, and that's fairly important when you're trying to look at statistical trends. Here is the frequency of overbidding in the blue, basically telling you that fewer sellers are getting overbid than are getting underbid, but you can see the trend is down a little bit, but still roughly 40% of the sellers are getting more than their asking price, maybe 39% at this point. Now you're going over to the orange. That's the sellers that are getting less than their asking price, and that's now up above 50%, maybe 50.5%. And then finally down here is the sellers that are getting exactly their asking price, right about 10% of the marketplace. Here's the frequency of each of the counties. So this is how common it is. San Mateo County is the least common, with basically 30% of the sellers getting more than their asking price. I actually had to expand this down. If you go back to last week's archive, you'll see that it only went down to 30, and now I went down to 25, so you can see that it doesn't go below 30 yet. And at the rate of decline, I would expect it to go below 30 next week, and I may have to adjust my axis again at some point. It's going to be pretty hard to believe that it would ever get below 15. And the reason I say that is even back at the World Trade Center aftermath, 15%, I think it might have even been 17% of overbidding was occurring. And that's because some people deliberately underpriced their homes, some people mistakenly underpriced their home. Some people really fall in love with the home and want it and don't want to risk losing it. So there's overbidding happening even in a really slow marketplace. And that's why it's important to look at relativeness. Here's your delta overbidding. So you can see that San Mateo County has come way down, and this is where it's compared to the 4-county. So it's doing the least well. Alameda County is doing the best. Santa Clara County is second best and pretty close to what the 4-county average is doing. And Contra Costa County is third best because Alameda County is way above. This is the number of offers accepted, and I think this is where the story is that nobody's paying attention to. I'm calling this the worst, and the reason for that is it's not settled out yet. Why I mean by that is you still didn't have TFTs for 2022 data. 2021 data, any transaction that was going to fail, failed. All the ones that recorded. So all these numbers are rock solid. If you go back, you had 488. It's just a coincidence. It's an exact match, and I did check my numbers to make sure. Next week, this number might go up a little bit. I estimate it so that I won't have the big increase, but then it will start decreasing, and it will be below 488. I can almost guarantee it, which is why I'm labeling this blue. So this is going to be the 25th out of 25th. It's the 10th out of the 10th worst year. Last week actually did a little bit better because, in 2007, we only did 393. So 469 significantly better, but that is the second worst we did. The third worst is up here in 2018 at 634. We're much closer to 400 than we are to 635. That probably will not become the worst week we've ever had. I don't think we're going to lose 78 transactions. I would be surprised if we did, but it is an honorable mention. Then the 2 weeks before that were the worst we ever had. And then before that, we were doing better, 630 versus 528. It's the second worst, 24. And you can see a lot of 24s through here. And you got a couple 25s and then 23s. And it's off the table now. But if you go back earlier this year, we were having the second best year. And what was surprising is how rapidly we went from the second best year to essentially the worst or second worst year. Now we're moving on to blended data. This is going to be single family homes, condos, and townhouses, San Mateo County and Santa Clara County blended together 5 weeks. This gives you the DUI going over, and this lets you see each of the components individually in micro market areas. You can see you got some solid blue coming on. You still have some significant red in Santa Clara County in moderate priced areas. So that's noteworthy and I think would surprise a lot of people. Here's the heat map, and this 253 days, that is an accurate data point. In fact, when I checked my data, it's almost up to 350. And my check data was there was only 3 offers that were accepted in the last 5 weeks and 29 active listings. If we were at 30 active listings, it would be 350. The 253 is probably because there was a 4th sale that may have TFT'd in between the time I got my actual go with data and my check data, but the 253 would have been accurate for the time of day the data was gathered. Next closest is 111, and 253 is getting up there. I'm go saturated blue at 145, so I'm way saturated. The expensive areas is not close to being saturated yet. You can see Los Altos, Palo Alto has a hint of blue because it's above 90, but again, you have a fair amount of red still showing up. You have 3 areas of significant red. Here's the overtude magnitude. Here you have a lot more blue. In fact, the only area that's red is Cupertino, Sunnyvale, Campbell, and then a few areas like the Milpitas area and Los Altos, Palo Alto are neutral, as well as the coast, because sellers are still getting their asking price. In fact, it's a little surprising that the coast is doing so well when it's got the slowest DUI, but the slow DUI will impact sale price and the overbidding in 5 weeks from now, not 5 weeks ago. Because remember, to get magnitude of overbidding, I need closings, which delays me by the length of escrow approximately 5 weeks. Here's the frequency of overbidding. So overbidding is way less common. Even in Cupertino and Sunnyvale, basically only 50% of the sellers are getting an asking price. You can see it's very uncommon over on the coast, the expensive areas. And here's your price. The median is the middle number. The number to the left is the cheapest 10 percentile in that micro market area. The number to the right is the most expensive 10 percentile in that micro market area. Here's the breakdown so you can see them. So you can either start on the left in micro market and find out the market conditions, or start where you can afford to purchase a home and see what kind of conditions you would like, or use it to find what you can afford to purchase. Because if you're below the lower number on the left here, it's going to be very unlikely you're going to find a house. Now you may, especially if you're willing to buy a house on a busy street or a fixer-upper, but it's going to be a challenge because less than 10% of the homes in that micro market area sell for below this price. Here's looking at the breakdowns of the key components. Santa Clara County actually has a shortage of inventory. We only have 93% of the single-family homes you'd expect. It's the only one with a shortage. San Mateo County has a 30% surplus. Condos in Santa Clara County a 15% surplus. The Bay Cities is now over 300. The numbers have been in the 200s for a lot of the time, and that's because of the huge amount of building. DUI, basically pretty close to just over 50 in most of the areas. The base cities being at 72 indicates fairly convincingly, in my opinion, that there is a little bit of oversupply. 72 is not bad. You can't complain about selling everything out in just over 2 months, but it's noticeably higher than the 50 that the surrounding areas and types of properties have. Then the magnitude overbidding, basically 99 percentile, with Santa Clara County single family homes being right at 100%. Then the frequency of overbidding right at 30%, but Santa Clara County doing a little bit better at 37.5%. And the overbidding or the appreciations all over the place, from losing 3% in the Bay City condos to up 4% in San Mateo County condo single family homes, and Santa Clara County single family homes is doing the best, is up 15.6%. And that's not bad for 2 1/3 years, but you were up 43% just earlier this year. So the decrease from earlier this year to now is a 30% decrease, which is about 25% of the value that we hit the peak of. So if you know peak value, subtract off about 25%, and that's what you got now. Here's going back, and this is pretty close to apples and apples comparison. It isn't technically, because I need to get to December the 6th to gather the data, since it's data through December the 5th, but the number of closings and even the number of offers reported on a weekend are reduced. So the fact that today is the 3rd, Saturday, tomorrow's the 4th, Monday's the 5th, there's only one more day of data, so that it's pretty close. So days on market for the existing inventories up, come down. DUI 51, roughly the same as what we had in 2018. But other than that, you have to come all the way back to things like 2011, and then all the way back to probably 2007. Where are we? There we are. 235, 145, 86. So you can see we were clearly way slower earlier. Sales per day, I'm going to point that out. 14 and a half days. You're not going to find a number close to that. I mean, your closest number is 19. There is a difference between 19 and 14 and a half. This is what nobody's talking about. Huge drop in demand for the existing inventory. At some point, that's going to impact the marketplace in terms of pricing if it continues. There's no way to know. You can't predict what the future is going to do, but this low inventory is not what you'd expect to have. Here's your overbidding and then your price, and you're now down to 1,584,000. And the number of closings is down, but not down as much as the number of offers because we're still on the downward trend. In fact, you can see we're almost exactly the same as what we were in 2007. And with that, this is a slide that you'll get if you beat me on Saturday morning. Here's back to my URLs and questions, and I'll see if anyone's got any questions. And I would really appreciate feedback online, offline, any way you want on what you want me to do on that table of expanding to potentially 13 counties